Yeah, Jay, you can probably keep those. Um, you know, Jay, anybody who's got anything, any options that are puts, and they end up being quite down today, up, like in other words, you're making money on them. Instead of selling them, if they expire on Friday or whenever, consider selling whatever option is at the price that you paid, around the price that you paid, slightly above. Sell that strike instead. That will convert you to a vertical. And depending on how many strikes there are between the two, that's how much extra money that you'll have secured all your profit at that moment. You'll have secured all your profit. You can't lose money at that point. Okay. But then on top of that, by the end of tomorrow, you could potentially capture the difference in strikes. So if it's 5 points, like $500. It just depends, So if you've got some short, some puts, if you have some puts that you've bought, instead of selling them, sell the strike that's worth about the same, slightly more than you paid for them. If it's out of the if it's further out from where you bought, that will lock in your profits permanently. You won't lose money, and then you can potentially earn a little bit more money for free. Difference between the strikes. It's like an option arbitrage technique. Right, closing those down. All right, good. We've got this going now. Man, yeah, pay attention, guys. Can you do that at Webull? Yeah. Just depends on your option level, but yeah, you can do that. Instead of selling your option, sell the one that's lower, in puts. Sell the one that's lower. If it's worth, if the one that's lower is now worth, or later today, when you feel it's the bottom, when it's the moment you want to sell, see, yeah, exactly. Yeah. That's what I'm trying to teach the newbies here. But yeah. Turn it into a credit spread. Yes. Vertical credit spread. And then the distance between your strikes, you'll lock in profit. You won't be able to lose that. And you're going to get that money right away. And then over the next day or however long your expiration is, you can potentially, if it expires beneath your strikes, you could potentially make the amount of money that's between the strikes. So, either you can understand that and you'll be able to do it, or you don't understand that, don't do it. It's going to be too weird for you. Or if you give it a try, give it a try. I believe you might have to have a margin account for that. Yeah, I think you do. And more than $2,500 or possibly every brokerage has there's so many rules. If you don't have a $25,000 account in this world or a $30,000 account in this world, you can pretty much rest assured that there's about a list of 30, 40, or 50 rules designed to make sure that you can't do stuff. Lots of hand cuffs on. All right, I'm gonna label up these everything on my screen. But the market is zooming down more. Okay, let me pull up these labels here, and then we'll get started. Does anybody? Let's see. Okay, I'll figure that out in a second here. Oh, classes tonight, by the way. We'll definitely do class tonight, and we're going to focus a lot on risk management. There's a lot of newbies in here. And how many of you would be excited to spend the class tonight on risk management? Good. That means when to cut your trades, when to hedge your portfolios or positions, how to be aggressive versus how to be conservative, when to make those shifts. I think we're going to have to focus on tonight, and also how to continue to position for inflation. Now that rate hikes are in the future and inflation might start easing. There is a rare case where rate hikes cause further inflation, and it becomes a feedback loop. And then you have something called runaway inflation. And it's sort of like converting to a vertical on an option. It's a really good analogy. You're trying to get your vertical to be positive, but you can't, no matter how much you roll it, right? Because if the moment you started it was too late, there's nothing you've trapped yourself, and you're always carrying this buffer zone that you can't get rid of. And so usually what the Fed does to counter that disaster is to start raising rates really aggressively. You wouldn't see something like that until like the end of the year or beginning of next year, if that's what starts to happen. Inflation can then hit like 10, 12, 14, 15, 17%, 20% in those situations. Rare. Probably won't happen. But we don't exactly have an economist at the helm of the country right now. In fact, is the guy at the helm of the country even awake? Can you wake him up? Where's our businessman? We need a businessman back in charge in times like these. Reflation of an economy is a very touchy subject. Not politically, I mean touchy economically. It's, you have to do it right, delicately. You've got to stop outsourcing to other countries. You've got to add tariffs. You got to bring all productivity has to be brought home. So you can boost that productivity while doing rate hikes to squelch demand. So now people get richer, and the product prices and start to come down, and all of a sudden, boom, you hit this flourishing moment. If you do it right, it can be good. It can be done well. If you do it wrong, it can be a disaster. This is not the time for welfare programs, outsourcing, shutting down America. That's gonna cause issues. All right, you guys, I gotta go live on TikTok, and then I'm catching up with you. Are we still holding oil? Yes, but oil seems to have gone into some correction. I'd have to research why that was. I didn't get a chance already this morning. It may be that because of these forecasts. I mean, you just got to believe the charts, there must be some reason why oil had a negative reaction to this. That's all you need to know. Let's see if it follows through tomorrow. But I will tell you this. Look at the chart on oil. Look at, I posted yesterday. Oops, hold on. I say I will tell you this, like I'm not telling you something else, but no, that's not the case. There. Look at how oil has been ranging and expanding its range over time, right? And so look where we're at. We're at the top of that. This is a good time to tighten up your stops to get defensive on oil, not because we expect oil to go down. Oil, we expect it to go up, but it just might come down first. It might be at the top, or it goes and it breaks out, but it's worth being defensive, tight, conservative, watching yourself here at the top. So if you've made money on oil, dig, energy, all that kind of stuff, right now might be the top of this last trade on it, right? You can potentially hold it for much longer if you want to. What do you want to see? Absorb the pullback, or you can just get back in at the bottom. So this may be a topping point, as you can see, in oil and potentially energy. Let's look at the energy XLE chart here. So actually energy has been kind of like on a breakout according to at least what I'm drawing now, but I can, you always can change the drawing. There's lots of different ways you can chart a chart. For example, like this, and just draw them all up when you're doing your drawing. Just draw them all up. This one, energy like this one, looks like it can come back from here. And then it like broke out, right? So possibly it's on a new trajectory, which is this one at the moment is like all we can really see. Maybe it's a parallel to that previous line there. Energy's strong right now, but if oil has got any say into the energy future, it's topped. But if energy has any say into the oil's future, maybe it'll be breaking out. So, you got to take a risk. Look at the charts, see potential, plan for both sides, plan for both ways. Going against you, going for you. When would you flip? Is it a flip? A breakout on the top of oil here on this top edge would be a very bullish move on oil. Is it a break and run? Is it, if it does that, or is it a exhaustion, extension, and then it's going to peter out? You never know. That's the thing about trading. You have to take the risk. There's just, a lot of beginners come to the stock market thinking that if they just learn it, they're going to be, evil geniuses. And the thing is, it's riskier than a job. On a daily per trade basis, it's riskier than a job. So if like you came to the stock market thinking it's going to be like a job, it's time to wake up. That's not how it's going to be. This is for, big boys who want to run their own businesses, who like to take risks. You want to go gold mining, if you have to be a risk person to be a trader in these markets, in the stock market. And you're going to have bad months and you're going to have great months, depending on, if you're experienced professional. Dig, not to buy Doug. That's hilarious. Maybe up here you could buy Doug and sell Dig, right? Because isn't Doug the 2x inverse? Yeah, that would be funny. But I wouldn't necessarily go counter trend on something trending. Okay. So Carl, that's a real amateur mistake. I mean, I'm not calling you an amateur. It's very common to think, well, if something's done going up for the moment, like I just said, then shouldn't we get it going down? You don't know necessarily how much it's going to go down or how slowly it's going to go down. If you look at Dig, let me show you something. Pullbacks or downward bets on things that go up are typically much slower than when they go up. Up is where you want to put your money. Down, you'll be right about. but like you're not going to make very much. And why would you do that to yourself when you can just go find something else that's going down? Okay, but that's something we can focus on in class tonight. We got 6 minutes to the open. We're looking at Disney, TWLO, APTS, IRNT, DRMA. They all spiked up this morning and could be potentially good momentum trades. However, because of this reaction to inflation of 7.5% this morning, I don't think the headwinds are there in the market to make any of them follow through. You'd have to have a massive, beat that just couldn't be ignored. Like, Apple. If Apple released its earnings today, maybe it could have been what do they call that in a storm? It's like a good thing, the angel in a storm. What's the expression? Come on, Hive Mind. What am I thinking of? Or in the port, what do they call that? It's the protective thing. The port. Shoot. Anyway, maybe it could have been, the place where the thing that was zooming on the bad day like today. In general, no, it's not the eye. A port in the storm. That's exactly it, Preston. Yeah, you guys, I can't believe I couldn't put that together. I had it. The port in the storm. Thank you. So Apple and gold being the port in the storm, gold today would be a place to go. How is gold? Gold is just hanging in there, actually. It hasn't had its reaction yet. But the VIX is certainly going up. We've been preparing this for over a month now, right? I called the top. Fantastic. How I got that. And you guys can check out that video on my YouTube channel called How to Prepare for a Crash. And how I went defensive like 1 month ago and called the top. But you need to be defensive. If the writing's been on the wall for a month now, you need to be in consumer staples. Even if there's a market crash, even staples will go down. Nothing's impervious to a crash. Some things will go up. You ideally want to just be in the things that go up during a crash. And that takes quick rotation. Like literally, it should be within a matter of hours based on your chart reading. If a crash is happening, it's going to last a couple weeks. That's it. So you have to be on your toes and adjust. And you're going to lose money during that adjustment, and that's normal. But then over the course of the next few weeks, you're going to start to recoup and make money. And then when it hits bottom, then that's when you can start to get into everything else that's starting to hit bottom that could be in growth and retail. Anyway, crashes, that's a different story. We got 3 minutes until the market opens. And for now, you want it to be just in case we're not in a crash and we're just sort of correcting and sussing things out. You want to be defensively positioned and potentially inflationarily positioned. And I've been giving all those tips for almost a year and a half now amidst this reflation of the economy. So, for example, staples, yeah, you said it, Coke, Procter & Gamble, toilet paper, paper towels, canned beans. What is it? I forget who companies are listed for canned foods. Cereal, General Mills, the basics, people can't stop, Walgreens, probably Walmart, the amazing thing about Walmart was they didn't shut down during this last crash, and they did really well. They buffered right across it. They stayed the same in valuation, and then they just soared and went up. Kellogg, I don't know if they're on the market, but yeah, Kellogg. You got to look these companies up, and that's how you do it. But like, for instance, the S&P 500 consists of lots of different companies. Some of them are value companies like that. They're big, huge, behemoth, wonderful value companies with excellent metrics. And you can just invest in those by going SPYV, SPYV for value. You don't have to pick the individuals. For inflation, you might want XLF, financials, banks, because now they're going to be able to lend out money at higher rates and they're going to have better margins. However, the demand is going to go down because the number of people who can afford that, is going to go down, afford to get loans and such. So there are trade-offs, but banks should do well as rates start to rise coming forward. Industrials, base materials, the prices of everything going up. That's going to help base materials. Price of copper, the price of lithium, would be good. All that kind of stuff. All right, we got 30 seconds to the market open, and let the first 2 minutes play out. And then if it looks like we're going to break down lower than the first 2 minute range, grab puts on whatever it is you're looking at. Just anything and everything, whatever it is, but growth stocks are going to come under the most fire. If that's not the way it goes and we go up green all day, who knows? The market is here to destroy you. So be quick to react and grab calls then. Let's just watch. Here we go. 3, 2, 1. And we are in. Hey, thanks, man. I was an ignoramus on the market 25 years ago, but over time, you get to see a lot of shit, and I still have more to learn, and everybody does. Somebody said, Ricky says, call me a modern day prospector. I'm here for the gold. Trying to log into your account. We're experiencing technical difficulties, but your account is secure. Don't need this shit right now. Shoot. Wow. They're having server issues, I guess. All right, let me pull up SPY on the high-speed setup. Right off the open, we're starting to be bought up. So immediately, the immediate money is saying, hey, this is an overreaction. We'll see if that holds. This could be a liquidity trap. So in other words, a bull trap. Bull fuck what? Yes, a bull trap. Yeah, 450.86 low so far in SPY. I mean, SPY just went from 458 essentially to 451. No, even let's call it, 451. So it dropped 7 points there. The average range on SPY every day has been $8. So here we are at 452. So maybe we can see 446 today if it was a normal day. It could even get on the higher end of averages. So we might even see 446. We might see a plunge to 440, or we might see. I mean, right now everything's getting bought up at the moment, so it's probably a bull trap. But don't assume everything. It's okay to have a thesis, but watch the charts. Trade what you see, not what you hear or is in your mind. Don't trade what's in your mind. That doesn't even exist. All right, so the first 2 minutes are in, and now let's watch and see which way it's going to break. If it breaks up, then grab to the upside calls for the first 2 minutes. If you want to wait for the 5 minute opening range breakout, go for it. Here we go. It looks like we might be turning up, and I think that was the slight break there, but it didn't really push through. But here we go, calls. So now on the 2 minute opening range breakout on whatever you're looking at, and ideally it should be tech or growth, calls. Those are the stocks that are going to be moving the most today. Disney is not into it. Disney is selling off. And I'm watching some of the other momentum picks this morning to see if we got anything interesting going on. If DRMA breaks over 1.6, you'll be able to get in for, I'll be able to call that risk when it gets close. But okay, be watching DRMA. Yeah, do it, Chris. Take it. And if you're wrong, just cut it. There's no harm. And you can't play baseball if you don't pick up the bat. Is that a good analogy? You can't win a fight if you don't get in the ring. I like the one, you can't win a fight if you don't get in the ring. because you're afraid to get hit in the face. It's a fight. You know, you have to be willing to get hit in the face, and you have to be willing to go down for the count with somebody in order to win a fight. You can't win a fight if you don't get in the ring. Yeah, but that's fine. I like that too, Ben. But the reason why I modify it to you can't play baseball if you don't pick up the bat is not every trade is a home run. You might foul, you might strike out, but you're not going to do fucking anything if you don't pick up the bat. So I kind of like that. But getting in the ring, same thing. You can lose that fight, right? You can lose your fight. Yeah. I think also getting in the ring is a really good analogy because a lot of people are pussies, or let's say wimps. Let's correct that for the stream. Are wimps, and at first, and other people are ridiculously over risking, so it can depend. But one thing's for sure is that it's more of a problem for you to be risk averse if you want to be in the stock market. But if you have, if you enjoy taking risks, we just have to dial that in and give you some risk management. That's great, But if you don't take risks, we need to give you some balls management, what can we do? If you're not going to take a risk, how can we manage any risks that you can't take? You got to be willing to get in the ring. And so, yeah. IRNT. APTS starting to zoom. It might have even halted. APTS starting to zoom up to the point in which would be a pre-market breakout. That's 20.85. 20.85. I'm going to switch over to it now and get a finer view, and I'll see if it's halted. It is not halted, and it is not on a lot of volume. So that's the worrisome thing. It's high relative volume, so it could do something, but it's not like a momentum crazy rallying stock. But at 2085, it'll start to pique the interest of more traders' eyes out there. Yeah, so 5-minute range also broke to the upside on SPY. So now everybody's in calls on growth or tech or QQQ is where you should be playing that. Not necessarily SPY. I watch the SPY, but it's going to come from the growth. Any kind of volatility is going to be mostly from growth today. Growth is under fire. Cereal is not. Cereal's going to do just fine. So yeah, keep holding on those calls, and we'll follow the path of victory on this. On what, Rebecca and Cameron? Are you here? Keep me posted on halts. I don't have that screen up on my system right now. Oh, ANGH? Okay. Yeah, thanks, Cameron. Yeah, let me know anything that's halted, especially in high volume. All right, I'm watching the trades here on QQQ and SPY, if that's what you got in or whatever you got in, and we may be fully extended now. That could be your first profit target right now. Okay, that's what it looks like. Everybody's going for their first profits now. So that was what? That was 6 minutes from the 2-minute breakout and 3 minutes from the 5-minute range breakout. Taking first profits means, you get out 5 or 20% of your position. Everything's moving up right now. Somebody asked about Tesla and Amazon. For a day trade, everything's moving up. And with this kind of data, you can't, guess farther than your nose. We're taking this 1 minute at a time. And then, over the next few weeks or days even, we'll start to see what develops. Right now, it's a gap down retrace. That's what's going on. Gap open, gap down open, retrace. And this typically goes for, the coin flip says that this will typically go until the top of the hour. So you got 20 more minutes potentially of uptrend. It's going to put in that range. Sometimes that goes 10 minutes over. Sometimes it goes 10 minutes short. Sometimes it's right on the button. Everything on the stock market is stochastic, is a bell curve. Everything you say at every moment, everything anyone says about anything at any moment is a bell curve. Okay, ANGH is halted now. All right. Vimeo halt. Interesting. Is that Vimeo, the video service? No, it's not halted. Well, maybe it was halted. Okay, it's already pulling back pretty hard on Vimeo, but I'll keep that on watch. And what was the other one? ANGH. Okay, that'll be coming out of the halt in 4 minutes. Look at the market. It's still going. Who's in calls? How you doing? How much you up? How much can you bench? How much you up? By the way, if you're just in here a fly on the wall, and then it's tempting for you to day trade, and you want to, please don't. If you do not have $30,000, that's my rule. You need to swing trade or save and build or invest and build your account up to $30,000. Anytime you dip below $30,000, no more day trading. Don't day trade. That's my rule. But paper trade, however many years or months it takes you to build up to $30,000 to make your first day trade, be practicing with paper trading, simulated trading. Okay, we are now over VWAP on this retrace. We are about to come up on the Qs, the bottom of yesterday's close. So this is a take profit point right here. If you have whatever you have, take 5 to 20% out now. So if you had 10 calls, sell one. And sure enough, boom, there it is. It's starting to pull back. This is a major resistance level for the day, for an intraday trade. Yesterday's close. Low, rather. Yesterday's low. All right, Frank's up 40% on his QQQ calls. Make sure you're doing the profit taking thing. All right, we're zooming again. Okay, we had some funky prints there. Either that'll be corrected or I'm not sure what happened, but on my Dash Trader, got some funky prints. Not seeing that over on TOS. We'll see in a second. Anyway, we're still moving to the upside. Pets just came out of the halt. Okay, Vimeo's not really doing anything extraordinary. I'll pull Pets up. Let me see what kind of activity we got going on there. Nah, fuck that. There's not enough volume. But I thank you. I appreciate you telling me that. I want to check on every one of these. APTS is getting close. The breakout will be 2085 with the stop at 2030. So 50 cents of risk on APTS if it breaks 2085. I got to go switch on my fan. Just 1 minute. I'm getting hot underneath this closed vent here. All right, SPY's really rallying. QQQs, you're doing okay. Who's been taking their profits? Make sure you guys are following all the rules here. Turn you into profitable traders. Okay, looking at it again, I took my eyes off it for a minute here. But we are indeed struggling at this level, which was yesterday's low. So if you have unlimited day trading ability, you can just like get out now and then just wait for it to break the top again. ANGH is open. Go ahead and get in there for $1 of risk. It's halting. It's halting. It's halting. Go ahead and get in for $1 of risk. Calculate that really fast. About $1.50 of risk, whatever it is. You got about 7 seconds left, 5 seconds maybe. Enter to the halting to the upside. ANGH, boom, halted. ANGH halted at 1575. There was a lot of demand there. So that should carry through. All right, who got in? ANGH. You had seconds to do so. Okay, we are now starting to poke up again on SPY and Qs for some continued retrace. Who's in what? And I'll check on it. IRNT spiking. That's one that was very hot this morning. The market's continuing to retrace up. And oil. Nicole, I think, was asking somebody, Christina. Oil now up and over yesterday's high and about to test the high of the day before. So oil doing great now. And I imagine that, crypto will do well mirroring all of this, mirroring everything that's going on in the market for the moment. Okay, we got 13 minutes until the top of the hour. Well, the thing is, you might not want to cut oil yet, as I was explaining, depending on how the chart looks. But yeah, we're probably near the top. It's either that or it's going to break and run and it's going to be even much higher. Tell you what, add some oil if it breaks 52-week high. Just have that as a little rule. It makes a new yearly high at some point in the next few days. Get in and then set your stop to the low of the previous day. Yep. Everything's stalling out now, 13 minutes before the top of the hour. So if that's where you want to cut your first move, go for it. You can always get back in if it breaks to the upside again. Otherwise, we can wait to get back in on this pullback, which might last 5, 10, 20 minutes. Or it could be a full reversal. So that's the top of the first rally. We're getting pullback across all candle time frames. Top of the first rally. Brandon says Qualcomm, Roblox, good trades. Okay, cool. Fubo calls, nice. Facebook, Apple, Dundrell, wonderful. Not much going on in Apple at all, it looks like. Facebook did zoom up. Yeah. Good to get those growth stocks in these moments. Okay, we're pulling back on the indices. RMED. Somebody says RMED. IMT just went south. Can't pull it up in time, but if there's a trade there, go for it. But everything's pulling back right now. It might be just a pullback. It might not be a bearish trade. You need to be able to differentiate that. Don't get in down on things that are going up, even when they're going down. If something's going up and the trend is up, You don't touch it for bearish trades. We did crush IRNT in the past. Don't quite remember that, but okay. The breakout that we'd be looking for on that actually was kind of like where it's at right now, 4.6 for about 50 cents of risk on IRNT. That's about where it's at right now. So now you can get in actually for 40 cents of risk if you want to take it. But it did have first kind of failed attempt just now. Break 5 didn't follow through. Okay, we're starting to get some more momentum to the upside on the markets. So that's an entry again for calls on the markets. Next leg up might be starting right now. There's only 3 minutes of pullback. This is a very hot market, very hot for calls today. Really, really hot. Hopefully you guys either, I don't know, buckled up, stayed in, used your stop, pivot point trading, or got back in quick enough. We did? All right. INN. Amazing, because I just can't remember any of those. I think INN was what, like a month or two ago? Yeah. Been done. Yep. Yeah, so look at the market. You guys are losing out on calls if you didn't get back in. That's what I was talking about. The moment it starts to reverse, you can get back in calls, or if you're in calls, awesome. If you're already in the calls, awesome. A huge candle like that, you got to take some profits now, right as it slows down. Some. It's either an exhaustion candle or an igniter candle, and either way, there might be a little bit of retrace and pullback for the next few minutes. So that's it, starting to pull back now. So wanted to take a little bit of profits on that thrust, you know. %35 gains on Fubo, and you're out, Dom. Way to go. Post over and post your gains. All right, we're going to shut down the TikTok stream. Thank you, everybody on TikTok. If you want to continue with us members on the member stream or come check out our trading group, just click the link in my bio. And that goes for Twitch, YouTube, etc. as well. All right, the market's continuing to the top of the hour. We're still moving.